Market Outlook. Calendar Week 18. Calendar Week 17 was not simply a sequence of scheduled releases, but an event-driven picture shaped by macro data, geopolitics, and positioning. The economic data delivered a mixed signal. Activity data, consumer indicators, and purchasing manager data did not point in one clear direction. Markets translated the releases primarily through interest rates, the US dollar, and real yields. For digital assets, this created an environment with fast reactions around data windows, but without broad market participation. The central disruptive factor remained the Iran conflict. The situation fed directly into price formation through energy and transport channels. The Strait of Hormuz stood at the center as a critical corridor for oil, gas, and shipping. Risks to energy infrastructure, transport restrictions, and political responses increased risk premia on energy, freight, and hedging costs. These premia first moved through traditional macro channels and then into digital assets. The mechanical transmission chain is clear. Higher energy prices increase inflation pressure. Higher inflation pressure keeps rate expectations and real yields in focus. A restrictive rate channel supports the US dollar and raises the cost of global financing. Higher real yields shift capital away from rate-sensitive and risk-oriented segments. Market breadth in digital assets then narrows. Capital concentrates more strongly in liquid leading structures, while altcoins become more sensitive to outflows, thin order books, and wider spreads. The channel is energy prices, inflation and rates, US dollar and real yields, risk assets, crypto market breadth. The transition into the current situation can be summarized by two markers. Bitcoin dominance currently stands at 57.66%, while the Crypto Fear and Greed Index is at 33, placing it in the fear range. Both values describe a market structure in which Bitcoin continues to act as the leading structure, while broad risk appetite in the altcoin segment remains limited. Quantum data analytics did not develop any research signals in this environment. The reason was operational. The market regime remained event-driven, with short-term price impulses coming from macro data, geopolitical headlines, and cross-asset reactions. In such phases, the risk of regime misclassification increases. For that reason, filter adjustment, retraining, and model review remained the focus. No activation took place because stable patterns were being overlaid by exogenous events. For calendar week 18, several event windows move into focus. At the beginning of the week, the Bank of Japan provides a monetary policy impulse through the yen, global yields, and liquidity perception. Midweek brings pre-positioning ahead of the FOMC window. The Federal Reserve's rate decision and statement directly affect the US dollar, real yields, and financing conditions. In parallel, German inflation data and the euro area's preliminary consumer price index provide signals on European price dynamics. On Thursday, the United States releases GDP, income and spending data, PCE inflation, and the employment cost index. On Friday, the ISM Purchasing Managers Index adds to the picture of US economic activity. For digital assets, the isolated data point matters less than the transmission into financing costs, dollar strength, real yields, and risk appetite. Labor costs and PCE act through the inflation channel. GDP and ISM act through growth and economic perception. FOMC communication connects both channels with the rates and liquidity framework. The geopolitical situation around Iran remains an ongoing disruptive factor because energy, transport, and headline risks can overlay market reactions. Operationally, the relevant windows of elevated volatility are in the Asia session around the Bank of Japan, in the US session around the FOMC window, on Thursday around GDP, PCE, and the Employment Cost Index, and on Friday around the ISM dataset. Increased slippage occurs where thin order books, derivatives positioning, and fast moves in the dollar or yields coincide. For altcoins, risk remains higher when local liquidity is low, or token unlocks create additional supply density. For research signal development, the framework remains narrow. Activation requires clear market structure, confirmed liquidity, and a calmer event window. Around releases and geopolitical headlines, the focus remains on avoiding bad fills, slippage, and regime errors. This report does not constitute investment advice. It contains no recommendation to buy or sell digital assets or financial instruments. The content is provided solely for informational and research purposes. Quantum data analytics. Analytical. Strategic. Innovative.